only negative. Well, coming up on the programme, China's More Threads is unveiling a new generation chip lineup set to challenge developers' dependence on NVIDIA. The details next. This is Bloomberg. Coming to you live from Kuala Lumpur, the whole world is here. The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stocks to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest saldo of this trade war.
And the analysis you need.
China's not going anywhere, nor are we.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Vernon in London, where it's 5:52 a.m. Well, China's more...
我在每个座位上面塞一个替代
It's aimed at reducing AI developers' dependence on NVIDIA's hardware. Let's get more with our China correspondent, Mingmin Lo now. Mingmin, hello again. Just talk us through what these new products do. How do they actually compare with NVIDIA's chips?
Yeah, so More Threads had a company event over the weekend, and they unveiled two new generations of chips. They're called Huashan and Lushan, named after Chinese mountains. So Huashan is an AI inference and training chip that the CEO says is going to be better than NVIDIA's Hopper series chips. So that includes the H100 and H200 chips. And he says it is closing the gap with the Blackwell series chips, that's the latest line that is available from NVIDIA. So this is a very significant development because we know that NVIDIA just got approval from the Trump administration.
我蛮以他为荣，不过但是我都不
提到儿子语带哽咽，难掩悲痛。她是瑜伽场高龄80岁的母亲，原本家人还不忍心让她知情，但母子连心早感觉不对劲。
他每天都有来，你看。
拿出儿子每天传的讯息，日日报平安，但罹难的隔天早上就没收到。
伊讲出代志的。 我甲观世音菩萨因主讲出嚟讲俾人讲，我讲。
讲到儿子，于妈妈情绪激动，忍不住掉泪。孝顺的瑜伽场每个周末都会回老家，不过上周六人没回来，电话也没有接。看到新闻一直报道相关事件，年龄与特征一一吻合，追问媳妇才得到心碎的答案。
第一些时间，我就没有想到说是我儿子了。 第二天他又说于先生了，后来他又在讲说是在珍重公司的那个员工啊。后来我心里就挑一下，我一直打电话给我媳妇打电话，他就怕我伤心了，他就一直没有跟我讲。
瑜家中共有3个小孩，瑜伽场排行老大，从会走路开始，跟着爸爸一起到忠烈祠工作。
working on. So that's one. Number two is that More Threads is built upon its own proprietary computing platform. So it has its own platform called Musa. NVIDIA has its own called CUDA. So companies that have built their software around NVIDIA's chips and architecture will require a fair bit of adaptation to be able to integrate to the More Threads system. So there's a bit of transitional cost there. And when it comes to that supercomputing cluster, a lot of it is going to hinge upon connectivity. When it comes to the network sort of fabric, these are the hardware that allow the chips to sort of talk to one another, the end-to-end bandwidth to ensure that there is enough server capacity to crunch a huge amount of data. How reliable that entire system is still untested at this point, so that's something to continue watching.
And of course, we know that US lawmakers are calling for more Chinese firms to be listed under the Pentagon's list as military companies. So we shall keep an eye on that. For now, Min Min, really good reporting. We thank you so much. Min Min Lo there, our China correspondent. Well, let's check in our last couple of moments here on these markets. We've got futures pointing higher stateside, up 0.25% on S&P E-minis, even higher for Nasdaq futures, up 0.4%. Eurostock 50 futures, though, in the red as things stand, not following the moves in the Asia session. The MSCI Pacific Index up 0.9% at the moment. And just looking into your bond space, we have the 2-year Treasury yield up a basis point at 3.48%, the 10-year up 2 basis points at 4.16, and we do keep one eye on oil as well. Brent up more than 1% at $61 a barrel. Of course, we continue to monitor this blockade on Venezuela by the US. But that does it for Horizons Middle East and Africa. I'm Lizzie Burden in London. Do stay with us for Daybreak Europe. Oliver Crook is coming up next. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks happening everywhere, and that's what AI is most helpful in improving.
Key investors, top executives. global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevriani in Seoul, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London. These are the stories that set your agenda. Gold, silver, copper all hit records highs while stocks rally in Asia as investors bet on a strong finish to 2025. Oil gains as the U.S. intensifies a blockade on Venezuela with the Coast Guard in pursuit of a third tanker after boarding another vessel this weekend. Plus, the Trump administration defends the decision to remove several photos from the latest release of the Epstein files, saying it was done to protect the victims. Well, happy Monday morning. Let's get a check in on the markets this morning. Looking at the futures here across Europe, down just a little bit, about 1/5 of 1 percentage point there. Eurostoxx futures down about 12 points. The FTSE futures, similar story, down about 1/8 of a percentage point this morning. S&P, on the other hand, up about 1/4%. That adds to the rally we saw on Friday. S&P futures up almost 1 percentage point, erasing all the gains of the week. That continues into Monday. Same thing for NASDAQ. NASDAQ rallied hard on Monday, up 1.3%. That continues into the session again this Monday morning. We go across assets to see what else is going across the asset spectrum this morning. We are looking at gold at a new record high, 1.5 percentage points up. That is the new record for gold. You have $4,400 a troy ounce, and Brent crude also catching a bid after what we've been seeing off of the shores of Venezuela. A third tanker, we understand, in pursuit by the U.S. Coast Guard. U.S. Treasuries, on the other hand, up a little bit this morning, about 4.16%, and Bitcoin catching another rally, about 1 percentage point. Let's see how the Asian market session is faring with Min Lo in Hong Kong.
Hey Ollie, it is a happy Monday indeed here in Asia. We are seeing green across the board, and it did seem like after the very volatile week last week, the dip buyers came in to stabilize the market, especially the tech shares, and it looks like we could be set up for the center rally after all. The tech shares gaining and driving up the Kospi, the TAIEX, the Nikkei up by close to 2%, and the Nikkei as well is also supported by the weakness in the yen after the BOJ rate hike on Friday. Despite the FX chief from Japan this morning warning against excessive FX moves, we continue to see the yen at the weakest end in about a month. If we flip the board, you can take a look at where the yen is, I believe about 157 level, and some analysts are saying that 160 could be in sight for dollar yen, just given how futures contracts are pointing to more demand for shorting the yen. And here you can see the yields pointing up across the board, the 2-year yield hitting above 1.1%, the highest since 1997, and that doesn't bode well for the upcoming bond auction, 2-year bond auction taking place on Christmas Day. So we'll be watching that. But what else we're watching in Asia also, if you flip the board, is Motorhead, because that's a Chinese tech company that over the weekend unveiled 2 new generations of chips that it says is going to be better than NVIDIA's Hopper series, the H100 or H200 chips, and is closing the gap with the Blackwell series of chips. And here you can see big gains across most of these chip stocks in Asia. SMIC up about 6.3%, Hua Hong as well up by 5%. Ollie?
Thanks very much. Min Lo in Hong Kong with the wrap-up of the Asian markets. Now let's take it to the commodity market. Oil prices are in focus today after Bloomberg reported that the U.S. is still pursuing a third tanker near Venezuela. This as President Trump intensifies an oil blockade of Nicolas Maduro's government. For more, let's bring in Bloomberg's Stephen Sapuszynski with the latest of what's going on there off the coast of Venezuela. Stephen, if you could just for us illustrate the scale of the sort of Venezuelan blockade right now and how much oil is now at risk.
Yeah, so I think earlier this month we had the Trump administration seize a U.S. sanctioned oil tanker, and then he put a blockade saying that they were going to also be stopping any other sanctioned oil flows. I think there was a wide expectation that means unsanctioned vessels or maybe even empty vessels would be fine to continue going to Venezuela as long as they weren't leaving the area. But over the weekend, Trump stepped that up again. They seized a non-sanctioned non-sanctioned vessel carrying Venezuela crude, which the U.S. said is carrying, sanctioned fuel. The U.S. has sanctioned those oil exports So they were able to board that vessel. And then now they're pursuing a third vessel, which is not carrying any oil, but it's on its way to Venezuela. According to analysts and those who follow the market very closely, that third vessel is seen as part of the shadow fleet and has ferried sanctioned oil in the past. So overall, Trump's effort at setting up a blockade is going to likely fall down to whether or not other ships are willing to try to take that risk. The risk is that they could be boarded, that they could be seized. And if that does happen, that's going to reduce Venezuela's oil exports quite significantly. Now, the impact on the market so far, I think it's more of a shock and bang sort of thing, and you're seeing prices kind of jump a little bit because of that as a knee-jerk reaction. But when you actually take a step out and look at the fundamentals, the oil market isn't really that affected. Venezuelan crude makes up less than 1% of global demand, so even if you take a lot of it off of the market, especially since we're going to an oversupplied oil market next year, more so than we are at the moment, there's ways to find alternative supplies. So to summarize, yes, Trump is ratcheting things up. Yes, there is an impact on prices right now, but in the long term, the market is likely going to be able to find replacements.
So Stephen, so it's a pretty muted reaction in terms of the impact that it's going to have on the broader oil market. What kind of impact is this happening on the Venezuelan economy? How much pressure is being brought to bear on Maduro? Do we have a clear picture of how much pressure this instigates?
I mean, this is a much larger impact on Venezuela itself, their economy, and the leadership than it does on the broader oil market. Venezuela needs that crude, those crude sales, far more than the Chinese need it, for example, purchased through shadow fleet vessels. Now, they need this because they need the currency, they need dollar, they need some way to prop up their economy, some sort of sales to help them there. So according to analysts, you know, if this were to continue, this would be a huge hit on their economy. It could lead to more inflation. It could really hurt their coffers and also put further pressure on a government that's under attack by the US government. So when you look at that all together, it does seem like the Trump administration is aiming for some sort of regime change, and this is their way of doing it through at least economic means.
Well, Bloomberg's Stephen Stepchinsky, thank you so much for bringing us that latest off the sort of coast of Venezuela there and how much the impact will be on the oil market. Taking from oil to gold and silver. So gold and silver both hitting record highs amid heightened geopolitical tensions as U.S. President Donald Trump intensifies the blockade on Venezuela that we were just talking about. For more on that and the hopes for a year-end rally, let's bring in the Bloomberg MLive strategist, Ven Ram. So Ven, is the Santa rally on? Can we call it at this point in the year?
Morning, Oliver. Good to be talking to you. I think that, you know, there is definitely a Santa rally in the works, especially if you look at commodities and US stocks. I think what is happening with commodities is interesting because it is usually the gold that kind of sets off silver on a rally. But this time around, it's the other way. It's silver surging higher and higher on the back of the supply squeeze story. And that tail is wagging the dog, which is gold. And gold has gone up to a new record today as we speak. So I think that, you know, gold is going to go further as well, perhaps in the first quarter. Why do we say that? Because there's seasonality in gold. In the first quarter, in 17 of the past 20 first quarters, gold has rallied because that ties into the seasonality of, you know, heightened wedding demand in India and in China for the Lunar New Year sales. So, you know, that augury holds well for gold and silver in the first quarter. And of course, stocks, there's no reason to be selling US stocks at the moment for traders because, you know, there's the story of artificial intelligence propping up valuations. So it does look like Santa is coming to the markets this time.
And part of that story is, of course, what the Federal Reserve is expected to do next year. We've had some comments out of the Cleveland Fed saying that maybe it's time to take a pause and see where things go. What do you expect from the Fed next year? And how much is that playing into both the rally on commodities, but also the broader equity market?
Well, the Fed has outlined one more rate cut in 2026, according to the December 2025 dot plot. So if they take it to heart, I think that we should be getting just about one or probably two rate cuts, depending on how the labor market functions from here on. We had one very low inflation print in November, but that has been distorted by sampling issues. So it would be hard to read into that, which is what Beth Hammack mentioned over the weekend. So I think that, if you look at average PCE inflation, Oliver, this year it's been hovering around 2.8%. So with Fed rates already at 350, there is not much of a case for them to keep going lower and lower. And for them, they may want to preserve the level of restriction in the Fed funds rate. So I think that, the Fed is going to be restrained, not be able to cut rates as much as investors think they will be able to cut rates. But gold and silver, to your point on gold and silver, I think they are their own trajectories. I think their rallies have gone far beyond what would be mandated by rate cut expectations alone. So there is an element of speculation there. So I think that there is no incentive for traders to take too much money off the table there.
Well, Vin Ram, thank you very much there. Gold and silver decoupled from the Fed. M-Line strategist Vin Ram, thank you very much indeed. The Trump administration has defended the decision to pull several pictures from the latest release of the documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed and then restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
The latest release of the so-called Epstein files include thousands of pages of pictures, phone records, and notes from investigations, but many of the documents were heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. Their records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasize that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
Bloomberg's Miles Miller there for the latest on the Epstein file release that we got there on Friday. Let's get to the week ahead and all the things that we were watching this Christmas week. On Tuesday, we're going to get that delayed U.S. GDP third quarter reading. The expectations are for a print of 3.2 percentage points there coming in on Tuesday. Also on Tuesday, the Euro area new car registrations. We have seen some really impressive numbers from U.S. EU car registrations in the last couple of months. We're expecting that to continue. October was up about almost 6% in terms of the sales. We're going to wait that November number a little bit further, a little bit later in the weekend, watching very closely the electric vehicle sales alongside that as the EU stepped away from some of its climate targets on combustion engines. And on Wednesday, U.S. jobless data, Christmas Eve, U.S. jobless claims, we're expecting those to continue to signal limited job layoffs. Bloomberg Economics estimates initial jobless claims to come in at 223,000. You can get a roundup from all the stories you need to know on your what's going on today on this edition of Daybreak. We're focusing obviously very much on the silver rally, the gold rally, everything that we're seeing there, and obviously what's going on across in the commodity space as well as in oil. As we understand, the United States is pursuing a final tanker there off of the coast of Venezuela. Terminal subscribers can go to DAYB Go. Coming up, we'll dive a little bit deeper into the crypto markets as Bitcoin sells off into the close of 2025. Are there brighter days ahead? We'll ask the CEO of crypto analytics firm Kaiko. That's next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing bullish gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
Very good question.
Good question.
Great question.
I so appreciate that question. You simply ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to Daybreak Europe. Let's get into the crypto sphere a little bit here today. Crypto is set to end the year lower despite a risk-on period for stocks and demand for havens like gold increasing in the last couple months of the year. The cryptocurrency is headed for the fourth annual decline in its history, and the first that didn't coincide with a major scandal or industry meltdown. To dive a little deeper into the market, we are joined now by Ambre Soubiran, the CEO of crypto analytics firm Kaiko. So, well, thank you so much for joining us this morning from Paris. We'd love to get your perspective on sort of what is driving crypto at this point. When we thought, or I thought at least, I had some understanding there was a coupling to gold. We have that massive sort of decoupling into the end of the year. What's going on?
So I think the decoupling is more an indication that crypto, and specifically Bitcoin, is now its own asset class. We've seen a very significant shift during the year and a fundamental change in the types of flows we're seeing in the crypto markets. Earlier in the year, we've seen a lot of participation in ETFs and digital asset treasuries, and that pushed market depth to record high, as well as provided some form of liquidity floor. That has somehow withdrawn in the second half of this year, but it was more a signal that institutions are shifting from momentum buyer to price-sensitive allocators. And I think this is more an indication of the industry maturation rather than a weakness. And what we're seeing in the markets is basically deeper order books, tighter spreads, and lower volatility.
And so how do you account for that sell-off in the last couple of months?
I mean, first of all, there's a correction, just a natural correction from the second half of the year that was very strong. Then we have seen the October 10th crash, which was quite significant. We've seen $2 billion worth of Bitcoin that was, liquidated on the markets, and this is not something we can completely ignore. However, I think it's important to point out that the October 10th crash didn't break the market, right? It was more like it provided a reset and it wiped leverage for a while. It flushed out the leverage, it controlled, it tightened the risk controls, and I think the investment became slightly more conservative, especially when we look at leveraged derivatives markets. That being said, it didn't retract any of the investor demand. I think it just transformed a fundamental shift from the investors in how they become more kind of balance sheet risk-focused investors and rather just momentum buyers.
And so you've taken us through some of the lessons I think we've learned, some of the things we've learned about Bitcoin and cryptocurrency in 2025. Looking into 2026, what do you think are the catalysts that are going to be really driving the crypto trade going into next year?
Yeah. So we're seeing mostly three main trends, I think, that we're going to be driving the crypto prices as we enter in 2026. The first one is obviously all of the institutional inflow that is broadening the buyer base, and that is about durable buyer base, right? We're talking about identifiable institutional participants that are investing from balance sheets, and that, I think, is a structural change in the nature of crypto markets. So institutionalization is one of them. The second one, which I think is a very interesting trend, is perpetual futures. This is still driving somewhere around 60% of Bitcoin volume is driven by perpetual swap trading. And this is going to be interesting to see how it plays out over 2026. It's important to note also that most of the perps volume is concentrated on a single trading venue called Hyperliquid, and they're getting increased competition, and we're going to see that evolve. Now, the third interesting theme in 2026 is stablecoins. And stablecoins, we're going to see how that kind of moves into a more durable settlement layer for on and off chain, and how that becomes a structural piece of the market infrastructure. We've seen this year record volumes for USDT and USDC. And I think we're gonna, see large-scale stablecoin adoption. We're seeing regulatory clarity around stablecoins, and that will be a very important trend as we get into next year.
And in the things you're sort of looking for catalysts for next year, I didn't hear President Trump. How important is the President of the United States and him making crypto a sort of priority? Do you consider him still to be one of the catalysts here, and what could he do to support the market? And do you think that it's still a priority for him in his administration?
I do think it's still a priority for him. I think he did, completely create a release of the pressure, of the fear pressure that institutions had doing anything remotely related to crypto. He did that in a way that created some volatility and confusion about a year ago. But when we look at where we are a year from now, it's been overall very positive for the space, and we've seen much more regulatory clarity coming out of this, and I think getting into next year, it's we're past a point of no return when it comes to regulation and institutions interacting with crypto markets, and that has also released all of the pressure around initiatives about using blockchain as a technology, and this is all we hear about tokenization. Recently we've heard about the native tokenization on-chain of U.S. treasuries. I mean, we're seeing now so much more than just crypto, and a lot of that is due to the current administration around views around crypto and blockchain in general.
And I'd like to end on a very sort of unfair question, which is, where do you see Bitcoin ending the year next year, if you can make a call on that?
I've seen a bunch of assumptions around 200, 250, and I would agree with that.
Okay, well, thank you so much, Anne Boissou-Biron, CEO of Kaiko, joining us this morning from Paris. Thank you very much. Coming up, talks between the U.S. and Ukraine described as constructive, but still no deal to end the war. More on that later in the program, and this is Bloomberg.
you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players,
did you know that you can add box, validate it, then you can go to this little beaker here, and you can smooth it out, validate it, then you can go to this little beaker here, and you can smooth it out. You can also inflate it. And let's say you wanted to paint it. You can also go here, you can blur the color. Really cool stuff that I have to use much more in my upcoming tutorials. So they made me these cute little e-gift cards, so if you know anyone who wants to learn 3D and wants to learn with me, they can take my premium Skillshare classes. Also, shout out to all the people that are already on my Skillshare. I love showing your work in my Instagram stories. Add a cone.
这招超蠢的，你有发现吗？哇塞，这个陈彦达这个。
Particularly in Europe, where you have a continent that is basically very poor in natural resources, to generate that energy, could that be a catalyst that actually builds the argument for renewable energy in order to run these things?
I think that's absolutely right. You know, everyone talks about AI, but the fundamental requirement for AI is clean and cheap power. And that is the big opportunity for the renewable sector. We've been here before in, you know, the clean tech 1.0 boom and bust, and everyone was saying what a disaster that was economically. But actually that produced solar and wind, which is now some of the cheapest energy in the entire world. Solar is, you know, the cheapest form of energy, and you can have enormous success in powering data centers, not just from those type of renewables, but also companies like Radiant, who we backed at Giant, who have signed up $1 billion deal with a data center to provide cheap and clean nuclear energy. So it is a massive opportunity for green tech to be part of the solution to AI and not be left behind.
Now I want to get into some of your kind of bold calls here for 2026, saying that 2026 is the year for physical AI, going out of the chat box and into what?
Absolutely. So I think, you know, so far this year, your viewers will have been using AI to generate images, to maybe make presentations, do legal work, and that's all really exciting, using chatbots for that type of thing. But I think what's even more exciting is how AI is going to transform the physical world. And I think you'll see companies like Cusp AI in London, who are using AI to discover new metal organic frameworks that can redesign things like semiconductors or electric vehicle batteries. Those type of companies are going to not just transform industry, they're going to completely redesign it from first principles. So I think 2026 is the year that AI kind of gets out of the chatbots and into the physical real world to start fundamentally redesigning it. And that is an enormous economic opportunity.
And you think that 2026 is also the year of the autonomous car? It will be driven around in 2026. Is that going to be just in the United States, where it's going to be a little bit easier regulatorily, or are we going to see that in Europe here as well?
Yeah, well, so Waymo is coming to London and Tokyo in 2026. And I think, you know, there's a classic quote about technology, which is the future is here, it's just not evenly distributed. Right. In San Francisco, a quarter of all ride shares are done by Waymo, more than Lyft now. There's almost zero outside of San Francisco. So if you go to San Francisco, it kind of feels like the future's arrived. It hasn't yet here in London, but it's coming in 2026. And I think you'll start to see very quickly cities feel completely transformed. And by the way, autonomous vehicles can save, you know, 1 million people die every year from car accidents. That can be completely transformed through autonomous vehicles.
You also see a coming of age for European tech. I feel like we've heard about that for a couple of years now. Why is this year different?
So I think that the year just gone is actually a really important year. We've seen some very, very large rounds for AI companies, but also companies like Revolut. Revolut hit a $75 billion valuation this year. So in Europe, we've always had the technical talent, We've always had enough venture funding actually in the last few years. What we've really missed is those big success stories, which get to very large scale. And when companies like Revolut get to $75 billion, that created 200 millionaires so far. Those people become not just angel investors in the next generation, they become fantastic founders themselves who go on to start companies. A giant, we've backed a number of ex-Revolut founders who bring the rigor and the kind of dynamism from that company. And so the role models and the trickle-down effect of talent and angel investors, that takes a lot of time. And yes, we've been talking about European tech for a decade plus, but it does take time for the big winners to emerge and then for this sort of second order effects to trickle down. We're starting to see that now.
And I'm wondering if you have a view on European tech, particularly on the continent of Europe, and particularly now with this European Commission that is theoretically supposed to be cutting back regulations, supposed to be sort of generating more investment into the private sector for European tech. Do you see that as something that's going to actually make a difference? Is it come into your thinking at all in terms of what the Europeans want to do?
Yeah, well, so we've got a view at this, John. We invest 50% Europe, 50% US. And our US friends are often laughing that kind of the only thing that Europeans are good at innovating is the little bottle cap lid, which stays on top and annoys everyone. Actually, I think there's far more going on.
Many memes on there, yeah.
Many memes. But the reality is, Europe minted 28 unicorns this year so far already. So there is enormous progress in technology, and I think we have every bit of a right as the US, particularly on AI and physical AI, at the intersection of technology and some of our big industrial incumbents.
Well, Tommy, thank you so much for joining us this morning. Greatly appreciated there for a view of tech going into 2026. Tommy Stadlin there, co-founder and general partner at Giant Ventures. Excuse me. Now some other news making stories this morning. A power outage across large parts of San Francisco on Saturday led to major disruptions with Waymo's driverless cars freezing mid-journey, potentially some of the risk of those autonomous cars. Passengers who were in those Waymo cars at the time said they were confused by pedestrians crossing at junctions where traffic lights had failed. The Tesla CEO Elon Musk says his company's robotaxis were unaffected by the power cut. An engineer has become the first wheelchair user in space, blasting off with Blue Origin. Severely injured in a mountain bike accident 7 years ago, Michaela Benthaus rocketed away from West Texas on Saturday with Jeff Bezos' company. The launch marked the 16th human space flight for Bezos' tourism company, using New Shepard, a small craft built to send people to short distances at the edge of space, as well as to conduct research missions. Disney's Avatar, Fire and Ash, has debuted as the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title film this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding last year's total. The top 5 foreign films have generated about $850 million. Plenty more coming up. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. We are looking at a couple of charts here to close out the day for us here on Bloomberg Daybreak Europe. The rally in the MSCI Asia Pacific Index, you can see just gathering steam here into the end of the year. And you really think about where we've been this year. This absolutely cratered out back in April, back in Liberation Day. No sign of turning around ever since then, really rallying until the end of the year. And moving along to the commodity space, we're looking at precious metals. Gold has been what we've been talking about. We've got a record high there, but there's another metal that is outperforming even gold that's rallied 25% in the last 10 sessions. That is platinum. You can see it actually reaching for the skies there, actually beating gold substantially over the last year, up 118%, gold up only about 70%. We're also considering, as we close out the year, the dovish year that we've seen from the central banks and the sort of rate cuts we've seen across the board. It's going from the ECB, 100 basis points there, looking at the Bank of England, another 100 basis points, Bank of Canada, another 100 bips, and the Federal Reserve coming in at 75. Some pretty active debates about what's going to happen next year. And of course, the BOJ, really of these major central banks, really the only one to have raised rates by 25 basis points this year. Looking at the futures heading into today's session and opening trade, we're seeing stocks in Europe down a little bit there, about down 1/5 of a percentage point. Similar picture for FTSE futures, down about 10 basis points. But again, I think where the action should be focused and what we're watching very closely, S&P futures building on that rally on Friday, up almost 1 percentage point on Friday, wiped out all the losses, in the NASDAQ up almost another 0.5 of a percentage point after gaining 1.3% at the end of last year. We'll be speaking a little bit later to Fed Governor Stephen Miron on surveillance at 1:30 London time. That's it for Bloomberg Daybreak Europe. Opening trade is up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on Filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
What is going to be the consequence for U.S. markets? We'll see Moody's gaze across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Oil gains as the US intensifies a blockade on Venezuela, with the Coast Guard in pursuit of a third tanker after boarding a second vessel over the weekend. Gold and silver hit new highs thanks to geopolitics and rate cut bets as supply concerns, tariff fears and strong demand drive copper prices to a new record. Plus, Japanese yields rise amid speculation the BOJ may need to raise interest rates more aggressively to curb yen weakness.
Okay, good morning, Anna. Good morning, everybody. Let's put all of that into numbers and talk about where we sit with these markets this Monday morning. Euro Stoxx 50 futures are actually down, which is interesting because US futures are higher. Are we going to see that discrepancy closing? The Japanese bond market, epicenter of the action, I would argue. Japanese 10 years north of 2%. When was the last time we were north of 2%? Oh, yeah, 1999. Is the BOJ going to have to move earlier? We're going to talk about that in just a minute. And pick your commodity this morning. I picked gold, but there's plenty to pick from. Gold is up by 1.84%. As Anna says, fresh records for gold and silver. Copper's on the move. Gold and silver and the precious metals complex are moving higher. But actually, in some ways, the geopolitical story could be in oil. That's also moving higher. We've got a lot to talk about on all of those fronts. I picked gold. It's up by 1.85%. We're going to be spending a lot of time in this show talking about commodities. So let's get it going. The countdown to the opening trade starts right now. Monday morning, good morning. Pick your commodity. Gold, silver, oil. Let's start with oil. Talk about what is happening in Venezuela. The Trump administration is after a third tanker, part of the dark shadow fleet that we talked about in relation to China and Russia and Venezuela. The grip is tightening around Venezuela. What impact is this going to have? Are we expecting higher oil prices? And if so, how does that feed through?
Yeah, we are seeing slightly higher oil prices just this morning, up by 1% then, guys. 61.13 on Brent. We dipped below $60 a barrel last week as we were watching that glut story play out, but then putting a floor under it with this geopolitics, and that continues to be the case this morning. So there's the Venezuela story. Yes, they're after this Centuries tanker. That's the one they boarded, over the weekend. Now they're chasing another one called Bella One. This is a country that has the largest reserves in the world, but it doesn't export very much right now. What it does export goes to China, and that is the target of the Trump administration right now.
The question is, what message does this send to others that use the shadow fleet as well? Is this also an attack on Russia? Does this have any impact on Russia? What does it do to this kind of secondary market that exists in global oil? And how does it, which actually hasn't changed very much. What you've seen over the last few years is a kind of shuffling of the decks of where oil comes from and goes to. And that has changed quite significantly. You see this sort of rewiring process. If you start taking some of these ships out, and taking them to the United States and effectively locking them down, does that change the market for Russian crude? And how does that change India's story and China's story when it comes to crude?
And we are seeing some news flow surrounding the Ukraine story and Russia in that context over the weekend. And on Friday, we saw the first time a Russian shadow fleet tanker being attacked in the Mediterranean. So this is taking these things to another geography. And this was by Ukraine, of course. This was an empty oil tanker, so not at risk of spilling. But we've also seen Ukraine striking a Lukoil facility in the Caspian Sea. So there is a step up in that kind of attempt to fight back by Ukraine, as the conversations over the weekend in Florida continued between the United States, Ukraine, and the Europeans, at least.
So let's talk about what signal does this send, and let's fold in some of the other kind of metals that we've already mentioned. Gold is up and silver are up. They're up partly on geopolitical concerns. They're up partly on kind of this liquidity story surrounding what is happening with this market, and also concerns about lower rates. There's the kind of various things we've got to. Copper, I think, is a much more interesting story as well. And what you're increasingly seeing is a sort of balkanization of the copper market, which takes me back kind of to the oil market. You're seeing kind of segmentation. There's this balkanization. Like the copper market is now so strategic that it's becoming a critical asset in a way that I just wonder whether Venezuela kind of fits into that narrative as well. I don't know. Copper's going higher. The clean electrification story that surrounds that, got fresh records there. You're going to see a lot of choppiness next year because you're going to see a different price in London and New York and Shanghai, and that's going to be really interesting to watch as well. But what does it tell us broadly about inflation? And I think that's the kind of the step back moment. Is all of this basically signaling that there's a lot of people out there trying to hedge the inflation
Yes.
narrative.
Well, that's interesting, isn't it? Because for a lot of when we were worrying about what it would mean to put sanctions on Russia at the start of the Russian attack on Ukraine, we talked about balkanization, about the world falling into different camps, and that would be inflationary broadly. And there has been a conversation about inflation over the last couple of years, of course, but there's also been downward pressure because of increasing supply from OPEC Plus on oil prices. So that has been actually the dominant theme of late, hasn't it? That negativity around the oil price because of OPEC Plus. But yes, you're right to highlight everything that's happening in precious metals. We're seeing the highest levels on gold and on silver since 1979. We're also seeing the highest levels on copper since 2009. So incredible moves that we're seeing there. And whilst we're thinking about inflation, let's talk about yields, shall we? And what's going on with Japan, but not just Japan, the global yield narrative.
So let's start with Japan and talk about Japan. You've got the currency chief in Japan out voicing his concerns about the fact that we've seen a rate hike but the yen falling. And there's talk now of intervention. We're chasing the 60 level. The market's clearly going to target that. What are the Japanese going to do? I think that's the question this morning. So we've got a weaker yen. What do the Japanese do next? Do we just see verbal intervention? We've already got that. The market, I think, was probably expecting that. Do we see further and earlier rate cuts coming through? And I think that's the real question. That takes you to your yield story. If we see rate hikes, make sure I get that the way around because it seems anomalous.
Yes.
If we get rate hikes, how much further do the Japanese go? And does that change the narrative with relationship to other bond markets as well?
Yes. Well, what do they need to do to change the narrative around the yen? Because we've seen the yen disconnect from that yield story quite considerably over 2025. So even as we were waiting for these hikes to come through from the BOJ, there was a thought in the markets that, well, there were other things at play when it came to dollar yen. And certainly the yen was not getting a benefit of that sort of interest rate conversation that was happening in Japan. So will they need to come back with more? And we certainly see yields on the move as a result of that. But the global story you nod to is really interesting because on Friday we saw Germany and France, the yields there up by 4 or 5 basis points. Not a huge amount, but this is slowly ticking through. And there was a lot of talk about a stronger Germany. The Bundesbank had a report out talking about a stronger German economy. And if that starts to go global, we've got Treasury yields higher again this morning. If that starts to go global, the US 10-year has struggled to go below 4%. It has done a little bit, but will it start to come back? It seems to be the conversation on the Markets Live blog this morning. And what will that do to stocks?
Yeah. Do you get let's talk about 30 years. What happens to the German 30 year? What happens to the US 30 year? Is the US 30 year potentially going back towards 5%? 5% really matters in the States because mortgage rates have been coming down. And the rest of the world doesn't fix in the same way that the US does in terms of the back end of the bond market. Are we going to see that potentially coming through as being a factor into 2026? I don't know, but it feels like the bond market is still setting up other asset prices for some potential shocks. When you get to 5%, you get back to 5% on a US 30 year. What does that do to stocks? What does that do to some of these commodity trades?
And we've asked a number of times on this programme, what happens to the Trump administration's desire to get rates lower if putting somebody more dovish in the seats at the Fed doesn't quite deliver it because the back end of the bond market has just not been listening to front-end rate cuts.
It won't, and probably will continue not to do so. We're going to discuss all of this with Isabel Mateas Ilago. She is going to be joining us very shortly, BNP Paribas Group Chief Economist. Start with Japan, we'll move on from there. Ben Haddad, France's Minister for European Affairs, has much to discuss with us this morning as well. We'll talk French politics, we'll also talk about the European picture with Ukraine, and there's lots. Europe has a lot to decide at the moment. William Sells, Global Chief Investment Officer at HSBC Private Bank and Premier Wealth, will be joining us, and Tom Aspin, Fortnum & Mason's CEO, in full Christmas mode. He doesn't want Fortnum's just to be about Christmas, though. We'll talk to him about what that looks like into 2026. Fed Governor Stephen Myron will be joining Surveillance at 1:30 p.m. London time.
Let us tell you what is coming up this week. I mean, it's Christmas week, so not as much as usual is the short answer. But tomorrow we do get US GDP data. We also get US jobless claims on Wednesday. That's pretty much where it stops in terms of the data points. So that's exciting. Tuesday, Wednesday will be we'll deliver some news. Then on Thursday and Friday we see markets close substantially here in Europe. Of course, we'll get trading over in the United States on Friday. I was looking at some Bloomberg economics research guy around the Trump administration and all the things you thought were going to happen going into 2025, some of which did and many of which did not. And some of the outcomes for markets were not as Bloomberg economics had anticipated that they would be. And they said that the lesson from this is to not underestimate, thinking about GDP growth coming this week, not to underestimate the supportive factors for growth in the States, AI, deregulation, taxes. We're going to hear a lot about all of those as we go into next year.
Yeah. the recent data just tells you you've got an economy that's actually doing okay. The labour market looks okay. Beth Hammack's been talking about this as well, talking about the fact that actually the labour market data probably is all right. The US economy looks like it's in okay shape. How much growth do you need to get, though, to continue to see stocks moving higher? And I think, again, that's a difficult one. You've priced in an awful lot of growth so far. You've priced in an awful lot of AI. How sensational does this data need to be to deliver what we've just seen again next year?
And what does the link between the economy and jobs need to look like before the consumer starts to respond a little bit differently? That will be certainly something we'll pick up with some of our guests.
What else do you need to know? You need to know that the M&A story continues and seems to be gaining some traction. A group of private equity firms led by Permira and Warburg Pincus have agreed to acquire Clearwater Analytics. The deal values the investment and accounting software maker at $8.4 billion. That's an enterprise number, i.e. it includes debt. The private equity group also includes participation from the Singapore state investment company Temasek and support from Francisco Partners. The US Special Envoy Steve Witkoff says recent talks with officials from Ukraine and Europe were, quote, productive and constructive. According to Witkoff, the group discussed the development of the existing 20-point plan, the US security guarantee framework, and the economic development plan for Ukraine. The Ukrainian President Zelensky agreed that negotiations were constructive, but noted that signals from Russia remain, quote, only negative. And turning to France, the Cabinet there is set to meet today to present a special law that will allow it to roll over next year's critical spending and taxation plans. That's after the 2026 budget negotiations were postponed into the beginning of next year. The Finance Committee of the National Assembly says it will review the special law on Tuesday, tomorrow, making adoption likely this week. This is a story again for next year. We just feel like we're pushing that French story out, and we'll get Mr. Haddad's take on this a little bit later.
Yeah, absolutely. Really interesting to get his perspective on what's going on. We will get the cabinet then meeting today, and as you said there, the context is here that they have this special law in France, which means you can roll over last year's budget if you fail to agree on a new one, and that's basically what has happened here. Then we will get the National Assembly, or part of it, adopting this loi spéciale tomorrow, and so it looks as if you don't go into a US shutdown. Is the way things work in France. But it doesn't mean that you've got agreement on next year's budget. And those budget conversations will then carry on into next year. What will that do to the spread?
So 2027 is presidential. Are we just going to see another year of huge volatility with French politics? Are we going to have a budget? Are we not going to have a budget? Are we going to have a government? We're not going to have a government. How much is this basically what we can expect to carry on after that kind of failed parliamentary election and that 2027 presidential election? The period just in the middle just looks like chaos, but I don't see anything that changes that next year.
And what does business do in the meantime? What does the economy in France do in the meantime? We'll speak to Isabel Matias de Largo about that subject, as well as many others when we get to her shortly. Coming up on the programme then, Europe's luxury leaders are seen widening their growth in 2026 despite uneven consumer sentiment and a stuttering recovery in China. We will get into the retail story throughout this programme. Plus, defence stocks have been on a roller coaster ride this year. We'll check in on those names at the market open as Ukraine peace talks see some progress. Is it progress that will stick to that sector in the trading day today? Up next, traders keep a close eye on the yen amid volatility in Japanese assets. If you have questions, if you want to get involved in these conversations around the desk or with our guests, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Beirut, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Good question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back. This is the opening trade. It is Monday, the 22nd of December. The answer to the question is not quite. Are we nearly there yet? Not quite. No, we haven't quite made it to the end of December. There's still quite a lot of news to talk about this morning, and we have a flat picture on European equity futures, but there's a lot on the move, and we'll certainly be watching what happens with basic resources and all the metals that are listed here in Europe, Guy, because we have some new highs on gold, silver, copper, everything this morning.
All of these are really interesting, and they tell you something about what the inflation narrative is looking like, maybe going into 2026, and the fact that gold and silver are rocketing higher, copper's rocketing higher. Maybe you've got a floor being put under crude as well, which will sequentially matter next year. All really interesting as we think about kind of what inflation does. Then you think about what you're seeing in the bond market, this kind of steepening curve story that you're seeing here in Europe. You've seen it in France and Germany last week, as you pointed out. You've got the US curve kind of steepening up as well. What happens in Japan next could be really interesting around all of this. So let's talk a little bit about that. When was the last time that the Japanese 10-year was north of 2%? 1999. That's quite a significant date, isn't it? Anyway, that's where we are now. We're at the highest levels in 26 years. But the significant thing here is that you've got this incredibly weak yen. And the expectation is growing that not only are we going to see verbal intervention, which we've had this morning, maybe you'll see actual intervention, but you also may see further and earlier rate hikes coming through from the Bank of Japan. So let's talk about that, and then we'll fold in all the other stories. Isabel Mateos-Ilagas, Group Chief Economist of BNP Paribas, joins us around the table. Good morning.
Good morning.
Is the BOJ going to have to go earlier than the market thinks? The market thinks 6 months, next hike. Is it going to have to be sooner than that if we keep seeing the yen doing what it's doing?
I think this could very well happen. I'll give you two other data points to add to your partying like it's 1999. 95. Last time the BOJ rate was at 75, was below 1.
Yeah.
So and it was the first time since World War II. So that's a pretty big deal. But I'll give you another data point, which is the labor market. According to the Tankan survey that we got last week, is at its tightest since 91. And so I think the BOJ is facing a situation where I think the market perceives that it may be getting behind the curve. Now, we heard from Governor Ueda that they're not behind the curve and they don't want to be behind the curve, but I think that's the debate. And the reaction in the yen market to the rate hike from Friday, I think that was the signal. The market fears that the BOJ is going to fall behind the curve, and they can't really afford to, especially with a government that is adding fiscal stimulus into the economy. So our forecast is also that they wait another 6 months, but the risks are definitely towards an earlier hike than.
Is that what is the messaging coming through the yen? Because as Anna pointed out, you've got this divergence between the yen and what is happening with the rate story. The yen is what is the yen? What are the signals that we are getting from the yen? Because the yen is weakening. Is that the market basically saying get on with it?
Yeah, I think that's the signal. And also you have to think it's you know the BOJ is still very heavily involved in the bond market, so the signals you're getting from the bond markets are a bit muffled.
Yep.
The signals you're getting from the FX market, of course, are a lot cleaner unless the government steps in to intervene. But it's a delicate point in Japan for monetary policy, and they also have to manage the politics, of course, and I think that's why they may have wanted to show that they're not eager to go too fast, but if the market is putting pressure on them, then maybe that makes it easier also for them to move a little faster.
Yes, that's certainly the politics with the new Prime Minister very much in play. Isabel, very good to see you. So how do you think about the global rates narrative going into next year then? If we have Japan hiking, they've been going their own way for a little while now, but the big gaps between these interest rate hikes and coming from a really low level, but a different narrative. Then in Europe, things seem to be in flux, maybe the ECB on hold. There's an expectation the Fed keeps cutting, it seems, and the Bank of England maybe does a little bit more. How do we make sense of this sort of diverging picture?
Yeah, so actually it's not, well, on one level it is diverging in the way that you described. On another, it isn't, because really what you have is an ECB that, even though President Lagarde doesn't like to talk about neutral, basically has reached neutral, sees inflation at target through its projection horizon without an interest rate cut. So it's at neutral. Bank of England, Fed, are still above neutral, so they're going to cut a little bit more. Bank of Japan is still below neutral, they're going to raise. So actually everybody's converging to neutral. And frankly, the emerging market picture is not all that dissimilar. So it's a picture of everybody going back to neutral, each with their own path, and the ECB, as you said, is already there. At the same time, you've got still a lot of government borrowing happening, in some cases increasing very significantly, for example, in Germany, which is going to impact the European yield curve. So this process of longer end going higher is probably one that's going to continue. Already was one of the big stories of 25, except in the US, but we expect to see more of that in 26.
And what will be the role of Germany in all of that? This report last week from the Bundesbank suggested, I think it was the second quarter of 2026 is when we really start to see the fiscal impact on the growth story kick in Germany, and maybe leads us to higher yields as well. What's the broader takeaway from that German story for you?
It's a very positive takeaway for Germany and for Europe. I mean, already this year we will have seen Germany finally break out of this no growth picture that it had been in since the pandemic. Really, we're expecting around 0.3% growth this year, and then a big jump to 1.4 next year. That will be a very significant lift for the whole of Europe. You know, whether it's more in the second quarter or the exact quarterly pace, you can debate. We're actually seeing some momentum already in the German economy, and of course, the more the government spending comes out, the more it will percolate through the economy. And also very interesting to see in the growth fund announced last week, the idea of really leveraging private sector investment as well. So it's not going to be just a government spending picture. There's also an acceleration of the plans to really mobilize private spending. So it's going to be very positive, and sure, it's going to drive up long-term yields somewhat, but the way we look at it, it's overwhelmingly positive. The benefits to growth far outweigh the impact on yields.
So here's my question. How long can the ECB stay on hold for? What's the average gap between holding rates and raising rates? Is 26 the year we get a rate hike from the ECB? Is 27 the year we get a rate hike from the Fed? When do we start? Because markets are discounting mechanisms, right? When do we start thinking about rate hikes? Because if we're done with rate cuts, the next logical thing to think about is that.
Guy doesn't like standing still.
No.
I think central banks quite like standing still.
I'm sure they do for now, but history doesn't tell us they do it for very long.
Look, the thing is, our forecast, ECB forecast, everybody's forecast is for inflation to go slightly further down in 2026. So that's not an environment where you're going to want to think about raising rates. So they're going to start to thinking about raising rates
So a rate hike
further out in 27. probably more a second half story. But it very much depends how quickly this growth acceleration in Europe materializes itself. If we're not optimistic enough, we're already optimistic, but if we were to see a faster rebound, you could hit capacity constraints maybe earlier in 27. It's possible. Also, let's not forget right now, we're expecting energy prices to continue to be a disinflationary influence into next year. But energy prices, you know, a lot of things can happen. So, but in the central scenario, the rate hike is a second half of 27 story, not earlier than that.
Yeah, because we have different signals coming through on energy. You know, oil prices going lower, but electricity very different, and a scramble for that, for everything AI and data center related. Depending on your reliance on these different sources, that could read very differently into your inflation figures.
That's right, and in fact, it's interesting when you hear ECB policymakers talk about their thought process. They're increasingly trying to push a picture of, well, let's think about inflation ex energy, because energy is volatile. It's got nothing to do with really the health of the economy, and that's tempting. You can see why they would say that. And I think if indeed it's important to keep an eye on what's happening to inflation in services, which has been stickier than expected, what's happening to wages. So far, the picture is very reassuring and is really a picture that signals an ECB that's going to be entrenched at 2% for some time, but of course need to keep an eye on that.
So can I park the central bank story in 2026? Is it the Fed's going to do what? Is the Fed going to cut once, twice? Is the Bank of England done? Is the ECB done? The BOJ maybe delivers a couple of hikes? I don't know. Where does the action come from in central banking in 2026?
Yeah, so I think central banks are probably going to be less at the center of the story than they were in the last few years, and that's okay. That means the economy has gone back to where it needs to be, and you let the private sector do its own thing. But to answer your question, yes, Fed probably cuts one more time, Bank of England cuts one more time, and that's that, and then you move on to other stories.
Isabel, thank you very much. That sounds fun. Isabel Mattiotti-Largo joining us from BNP Paribas. We'll be back to talk about metals. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld,
And I'm Romain Bostic, and this is The Close.
live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back, everybody. This is the opening trade, 30 minutes from the start of the European equity trading cash session. And the futures picture looks like this. We have European equity market futures pointing a little lower. Interesting to see what happens with London. We are expected to go lower, but oil prices are higher. Some commodity prices have touched new all-time highs, so we might see some outperformance by those basic material-related sectors, even if London does, as futures suggest, backtrack a little bit. But we're flat to negative, Guy, then, when it comes to the futures.
So about bonds. This is where I think the commodities and bonds, I think, is where the interesting story lies, maybe this Monday morning. Look at what's happening in Germany. Look at what's happening in France. Yields are continuing to push higher. Italy, nothing moving yet. But the story comes out really of Japan today, where you now got the Japanese 10-year JGBs at highs we haven't seen since 1999. We're north of 2%. The yen is down hard. Is that sending a clean signal, as we just heard from Isabel, to the to authorities saying, actually, maybe we need to see further rate hikes coming through and maybe more aggressively? That's the narrative this morning. There is a spillover effect. There's connective tissue that joins all these bond markets together. And that is what we're going to watch for, I think, quite carefully in 2026. What happens with the Japanese bond market? What happens with the story going into the Treasury market? Adam Linton joins us now from Bloomberg M Live to talk about all of this. Good morning, Adam.
Morning.
Let's talk about what's happening in Japan today. What message should global bond markets take away from the JGB picture?
Yeah, I mean, I think the path of least resistance is for yields to keep climbing higher. I mean, I know the currency's been sending mixed signals. It's kind of been detached from what we're seeing in long-term yields. But if you look globally at the moment, everything is just creeping higher. So JGB yields creeping higher because of rate hikes. In France, yields are climbing higher because of the fiscal situation there. We saw the Bundesbank report on Friday out of Germany. That's added upside to global bond rates. And then we saw that kind of hawkish hold from the cut from the Bank of England last week, which is all adding upward pressure. And I think the interesting thing here is the outlier potentially is, you know, what's going on with the Fed. They're going to be cutting rates, but as we've seen throughout this cycle so far, rate cuts don't necessarily equal downside in yields. And I think there's a lot of potential for the US to potentially get swept up in this. And, you know, I mean, if you take the US, for example, as well, one of the main themes in this year has been fiscal largesse. And I don't think that's something that's necessarily going to be going away. We're heading into a midterm election year. Republicans aren't polling particularly well. And, you know, we may see a situation where Trump needs to kind of pull the fiscal levers to try win the electorate over. You know, we've seen things like tariff checks, for example, be touted. Yes, we got the Supreme Court ruling, which could potentially cause some issues, but the administration is still confident that they're going to be able to enact those. And as you mentioned in your introduction as well, from an inflation standpoint, one of the main inputs is energy. We've seen climbs in energy prices because of Venezuela. And then if you take things like copper, gold, silver, those metal prices are all climbing higher as well. So I think globally, the path of least resistance is for yields to keep climbing higher.
Okay, so that's the global narrative. And then homing in on the US, you think curve steepness is what's going to dominate the conversation, will it, in the first, quarter?
Yeah, I think we're in a bit of a macro dead spot at the moment. We're not really going to learn anything for the next few weeks. It's not until we have the inflation and labour market reports for December that get released in January. I don't think we're going to learn anything there. But I think they'll probably skip in January. We'll probably get a cut in March. There's potential for another later in the year, which could add some pressure to the front ends of the US yield curve. But even if it is relatively anchored, for the reasons I mentioned, I do think there is potential for back-end rates to climb. And also, I think certain issues like Fed independence haven't gone away. I mean, that's been incredibly thematic throughout the year. But one thing I'm kind of looking at is, okay, if Trump has his person in the chair and they're not able to enact his rate-cutting agenda, what happens then? The pressure that he put on Powell this year could be even more intense on whoever gets the top job next year.
Let's talk a little bit about kind of how this impacts other markets. You get higher yields. What do equities do? What are the spillover effects?
So I think, the obvious, way to look at this is the AI trade. That's the what, everyone's getting increasingly nervous. We've seen some of the wobbles of the CapEx plans. We've seen likes of Oracle get hit. And I think, the AI trade is clearly maturing, but we're getting to that point where investors are wanting to see more returns on their investments. And if that's in the, kind of taking place, an example where, rates are rising, those pressures are only going to probably intensify. And one of the positives for the US equity market we've seen over the past few weeks is we've seen increased participation from small caps. Well, that's obviously a positive, but the one thing small caps don't want to see is increasing yields. So that could potentially, pose some headwinds for the US equity market at the same time.
The start of this year was dominated by the dollar weakness conversation, Adam, but then things have not been as weak of late. Second half of the year was not quite that narrative, and emerging markets have done quite well out of that dollar weakness story. What does the next year look like when it comes to the dollar, do you think?
I think I'm probably a bit more optimistic than most people. I think, the dollar will probably struggle against currencies like the Aussie dollar, which has got a strong hiking case, and it's got some of the commodity story backing it as well. But I think, if you've seen the example of the Japanese yen, if you take the dollar index, a part of that is a trade against the Japanese yen. The yen just cannot catch a bid. It will take authorities to meanly intervene, and even then, I don't think it's guaranteed. And also, a big part of the dollar index basket is the euro. And I'm not quite as optimistic as many people are. I think the Eurozone economy has been resilient, but I don't think it's necessarily going to run hot. And I still really don't see the case for the ECB to be hiking rates. It's not like Japan, where they're trying to escape from negative interest rates and zero interest rates. The deposit rate's at 2%. They don't necessarily need to keep hiking rates and support the currency. So I'm probably a bit more optimistic on the dollar than many people are.
It's going to be an interesting year ahead then. Adam, nice to see you. Thanks very much indeed. Adam's going to be here the next few days. We'll get his take on some of the other markets that we need to be watching. Adam Linton from our MLive team. Let's kind of connect what we've just been talking about with the yield story into what is happening with equity markets. Defence stocks are the obvious connection. I think that's where Louise is starting this morning.
Stocks are key on the mind this morning. This is obviously after talks between US Special Envoy Steve Witkoff and Ukrainian and European leaders. They met and they spoke of constructive talks around ending Ukraine and Russia's war. So they're saying, this quote from Steve Witkoff saying, our shared priority is to stop the killing, create conditions for Ukraine's recovery. So potentially positive movements on those talks there. So we'll be looking at the key defence stocks across Europe. So Rheinmetall, BAE Systems, Saab, Leonardo, the usual suspects. Obviously, they've been booming on this rise in defence spending. So we'll be watching them closely on the back of those talks developments. Next up, we're looking at mining stocks. This is after commodities rallying globally. So gold, silver hitting record highs. Oil is also gaining. Copper is also rising, reaching about 12,000 a tonne. So we'll be watching some key mining stocks in Europe on the back of that. We're watching the likes of BHP, Rio, etc. And then finally, we're moving on to Telecom Italia. So Telecom Italia, they've approved a proposal to convert savings shares into ordinary shares. You can see they've already had a great past year, up over 100% in their share price rises. They're saying this is all part of simplifying their capital structure. So, if it goes ahead, it could reduce costs, it could improve liquidity. And you can see the analyst ratings already 13 buys, only 6 holds and 2 sells. So already quite positive for the stock on that, but we'd expect this to potentially rally on the back of this news today.
Louise, thank you very much. Our equities reporter, Louise Moon, with the latest on some of the sectors and individual stocks we're watching. Coming up on the programme, we will head back to the French story. We talked about this a little bit earlier in the programme, as France's cabinet meets later today to discuss a special budget law. They failed to agree a new budget for 2026, and now they need to roll over the 2025 budget. We will speak to Benjamin Haddad, the French Minister for European Affairs. We'll have that interview for you next. This is Bloomberg.
cidade estava sitiada.
Isso ao começo eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People become their suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Monday, the 22nd of December. We're nearly there. 18 minutes to go until the market open. I'm talking about Christmas, of course, not the market open. But this morning, it looks like it's going to be a slightly negative open, which is interesting because actually you've got some fairly interesting action in the bond market, but you've also got US futures actually tracking a little higher.
Yes, you do. So there's a little bit of divergence taking place there. The bond markets this year have been certainly focused to some degree on what's been going on in France. So let's talk a little bit as the year comes to a close about that. This year has witnessed the French government embroiled in near constant turmoil. At the heart of the crisis is France's outsized debt, its beloved social safety net, and what many see as the economic imperative in scaling that back. In this Bloomberg Originals weekly documentary, we lay out the political minefield faced by President Macron, the grave stakes for the country's economy, and what might need to happen to break the deadlock.
In 2019, France watched a national treasure go up in flames. Now, there's a fear that the structures holding up French politics are starting to catch.
There is clearly a problem with French public finances.
Further worsening of the budget deficit. France's political crisis deepened today.
Most French citizens adore their nation's system of social safety nets, but those programs have become increasingly unsustainable. France has the euro area's largest deficit, massive debt, and every attempt at reform has ended the same way.
Surprise resignation from the Prime Minister.
4 prime ministers in 20 months.
We're heading into our 5th prime minister now in 2 years.
French politics is in a bit of a mess. It really is an unprecedented crisis.
Benefit reform sparks this. Unions break out the flares, and fragile coalitions collapse under the strain.
France is currently characterized by political blockage due to a very difficult public finance situation.
What people talk about is sort of a gradual sort of suffocation of France's ability to deal with its fundamental economic problems.
History suggests that at this point it's more likely that only a shock can force change. The question is what or who would deliver it?
And viewers can watch the full-length weekly documentary via the terminal or on the Bloomberg Originals YouTube channel. That was just a short section of it. Really interesting watch. Lots to talk about then with our next guest. The French cabinet is set to meet today to present a special law allowing it to roll over vital spending and taxation after budget negotiations were postponed to next year. I'm pleased to say we're joined by Benjamin Haddad, who is France's Minister of European Affairs. Minister, thank you so much for joining us. Lots to discuss in the wake of that European meeting, European leaders meeting at the end of last week, so lots to talk about there. But let's start with the French situation. In the very here and now, the cabinet is set to meet. We're going to see a special law employed and probably a rollover of this year's budget. How worried should investors be about the inability of France to pass new budgets?
No, look, the truth is we passed a few weeks ago the social security budget thanks to a compromise at the National Assembly. I want to underline this because this was unprecedented the last 3 years where we managed to pass through the 49.3 article of the Constitution, the budget. This time we managed to find a compromise on social security, and we're hopeful that we will find a compromise on the budget at the beginning of year 2026. Now, as you know, in France, we don't have shutdowns. What we do is when we can't find an agreement, we have the special law that rolls over the budget from last year. This is what we will do this week, but we will need to find a compromise between the political forces at the beginning of 2026. That's what our budget minister said yesterday. You know, when you look at the politics, at the end of the day, we're in a very similar situation to the countries around us. For a long time in France, we were used to having absolute majorities in parliament. This is not the case anymore. Now we need to do what our neighbors have had the habit of doing for decades, which is putting political forces around the table and finding consensus, finding compromise, building coalitions. This is first. Once again, this is what we've done on social security. This is what we will need to do on this budget.
Okay, so Minister, how long will investors have to wait to see fiscal consolidation bringing down the budget deficit in France?
Well, so our budget minister said yesterday we will hope to find a budget before the end of January, because indeed, as you said, we need to tackle deficits, we need to reduce our debt, we need to tackle public spending, as well as answer some of the key funding needs we need to face, like the continued increase in defense spending, which is included in this budget. But France will keep its trajectory of reducing its deficit to 3% by 2029. This is the trajectory that we've laid out with the European Commission, with our partners, and it's still clearly our objective to keep this on track.
Minister, good morning. France is struggling to make headway. Europe is definitely struggling to make headway. Last week was a really bad week for Europe. Not only did Europe fail to deliver on this idea that we could use frozen assets to help Ukraine, that didn't happen. The most secure deal also didn't get signed. People around the world are looking for leadership from Europe, and Europe can't deliver it. Why was last week so bad? Why can't Europe agree to speak with one voice and deliver on the policies that it has promised? Why can't Europe deliver that right now?
I strongly disagree with this assessment. I strongly disagree with it. If you look at the European Council, we managed to find a unanimous agreement to give funding to Ukraine through Eurobonds, 90 billion euros, that gives Ukrainians the visibility to continue to fund their defense needs in the next 2 years. We could have ended this European Council with no agreement on Ukraine. The most important thing is to defend our security and to defend Ukrainians against Russian aggression. And this is what we've been doing. We found an agreement, 90 billion euros, to give visibility to Ukrainians. Now, the vehicle, at the end of the day, is secondary to the main purpose, which was precisely to give them the funding needs that they were asking for. And we've agreed, by the way, a few days before, on keeping the frozen assets immunized for the constant 6 months to 6 months renewal. So we also found an agreement on this. The frozen assets will stay frozen in Europe as long as Russia doesn't pay reparations. We've agreed to keep working on what we could do with the frozen assets, but the most urgent needs was to answer the defense and economic needs of Ukraine, and this is what we did with this historic decision. But 90 billion euros for Eurobonds. We had done this during other crises like COVID, and we've managed to do this for Ukraine.
Okay. Minister, the view is that Europe wasn't brave enough. The view is that Europe didn't have the bravery necessary to take Plan A. And I appreciate that we got Plan B, but we didn't get Plan A because Europe was too worried to be able to deliver on that. What does that? Why doesn't Europe have more bravery? We're facing a threat. Why doesn't Europe have more bravery to take a big step?
This is not the view.
And agree to use these frozen funds.
But ask Ukrainians what they think about this. This is not the view of Ukrainians. Ukrainians are fighting bravely every day against Russian aggression. What they needed was the visibility to be able to continue to fund their defense needs. And this is exactly what Europeans did unanimously. We stepped up, we managed to find an agreement on 90 billion euros. This is a huge amount of money, and this is, a historic responsibility. Now, you had a plan A, as you said, by using the frozen asset, not seizing them, by the way, but using them with European guarantees. This was a very complex scheme that raised the legal questions from some member states like Belgium and others. And this is why the most important was to find unanimity. This is what we do at the European level. We find the consensus among 27, and we managed to find a scheme to be able to answer the needs so that we will continue to provide the support to the Ukrainian army, continue to increase the cooperation between the European defense industry and the Ukrainian defense industry, as well as the economic needs of Ukraine. I will tell you, in this negotiation, Vladimir Putin thought that we would divide, thought that we wouldn't step up, and for the last 4 years now, we've constantly stayed united. We're the first provider of aid to Ukraine. We're working with Ukrainians also on the security guarantees that we will provide after a ceasefire. So this is, Europeans stepping up for their own security. As for Mercosur, maybe if I can answer the other part of the question, what France has said is always clear. We're not against free trade in general, of course not. But when you trade, you need to ensure a level playing field and stop being naive. You cannot, for example, allow products that are fabricated with pesticides, with food additives that are forbidden in Europe, to enter the European markets. And this is what we've told the Commission with other partners like Italy. We've said we need a level playing field. We need to make sure that we have reciprocity on norms, that we have safeguard clauses to protect against destabilization of markets, that we have effective controls. The Americans do it, the Chinese do it. There's no reason why Europeans should not control the products that are getting into Europe.
Those things might be true, Minister, but this conversation about Mercosur has been going on for more than 2 decades. Why, and now there is a proposal to get to the bottom of it in January. Why will January be any different to December?
Well, because hopefully we expect the European Commission to be able to answer these demands. You've already seen some progress on shaping a safeguard clauses that would protect, it's a bridge that would protect against too many imports destabilizing a market. We've already seen some work on reciprocity of norms through mirror clauses. We should have effective control starting in January. We're also waiting for the Commission to answer the call of farmers of countries like France, Poland, Italy, and others to also step up on the common agricultural policy and make sure that we have the same level of revenue, the same level of payments through the cap in the next European budget, in the next MFF, as we have in the current one. So these are very serious issues, and they need to be finalized before we can take a vote on Mercosur.
Minister, there's a headline that crossed a few minutes ago, and it comes out of China. I'd like to get your take on it. The headline reads like this: China to impose up to 42.7% anti-subsidy deposits on EU dairy products. They're basically saying that the European Union subsidizes its dairy industry, and as a result of which, it should be hit with these kinds of anti-subsidy deposits, they call them. What is your reaction to that? What is the relationship, do you think, between the EU, between France and China looking like? And do you expect to see more of these kinds of headlines?
So first, I think these accusations are baseless, but I will go beyond that. You may have read President Macron's op-ed in the Financial Times a few days ago when he was addressing the issue of China and saying, we want to work with China as a partner, but here again, Europeans should not be naive, protect their interests, and ensure a level playing field. And when you have Chinese overcapacity that are subsidized, that are sent to European markets, we need to find ways to protect ourselves. This is, about thinking geo-economically. And you've seen some progress in Europe over the last few weeks. For example, through the safeguard clause on steel, on ferroalloy, we've seen tariffs on electric vehicles. And so this is why we need to stay united, and we need to have a robust trade policy that protects our common interests.
Isn't it a fair argument to say, though, that Europe subsidizes its farmers?
but this is done through international law and WTO rules. You know, the thing is we have reciprocity, and we've always respected international law in how rules are set up in the European market. And we expect the same from our partners.
Okay.
And so you see a world now where the United States and China are having a more aggressive trade policy. And this is not about being close.
Thank you. Minister, I've got to leave it there. Thank you very much indeed. Benjamin Haddad.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
A couple of minutes to go until the opening trades this Monday morning here in Europe. Let's talk about Friday before we get to Monday. Figure out exactly what happened Friday. Really good session in the States, particularly driven by tech. Look at the difference between performance from the S&P and the Nasdaq. Europe went out here. We finished a little bit higher. The bulk of the gains came sort of reasonably early on, but pushed on into the afternoon, which is interesting as well. The momentum continues because US futures are actually looking okay this morning. It's interesting to see the divergence between what we're seeing in Europe and over in the United States this morning. So let me show you the futures picture. We're not down by much, but we're not up, I think is the critical question here. And why are we not up? Euro Stoxx 50 futures are down by 0.1%. FTSE futures are down by 0.2%, which is surprising. Oil prices are higher. You've got commodity stocks generally reacting to what we're seeing in gold and silver and copper, and there's a lot of them in London. London's down by 0.2%. DAX futures absolutely flat this morning. We'll keep an eye on defence stocks. Louise Moon was here talking about that a little bit earlier, Adam.
Yes, absolutely. I'll pick up on a couple of those themes right now then, Guy. We've got defence stocks on our list of sectors that we're certainly keeping in focus. We have seen some progress being at least talked about. Productive and constructive is the language being applied to the Ukraine conversations that were taking place in Florida over the weekend by the US participants. But as we said all of last week, this is the US, Ukraine and European officials talking to each other. Not a great deal of engagement with Russia, so we'll wait to see what that throws into the mix. But we'll watch defence stocks with that in mind. Basic resources, for the reason, Guy, you pointed out, that we're seeing higher copper prices, gold prices, silver prices, all of those three touching records in just today's session. We'll keep an eye on those. Watch Danone, watch anything connected with the dairy industry globally, really. I mean, Chinese dairy stocks have been jumping as authorities there are announcing duties on certain dairy imports from the European Union. So we'll certainly keep an eye on the dairy sector with Danone in mind, the Netherlands in mind, all that in focus this morning, Guy.
Okay, here we go. Let's talk about the session that we're about to see this Monday morning and how it's going to begin. We're not expecting it to be that positive, but I think flat is probably a better word maybe to describe what we're going to see. The FTSE 100 expected to be down by 2.3%. Not a great deal on the downside. I'm not expecting big volumes, but there's still work to be done between this side of Christmas. The Stoxx 600, as anticipated, absolutely nothing to see here. 0.01%. So you've got a flat market there. FTSE, as anticipated, down 2.3%. We'll see how the CAC reacts. There you go, down by 0.2%. The DAX is absolutely flat, as anticipated as well. The IBEX down by 0.2%. At an index level, I don't think there's a particularly clear message coming from these markets. Are we seeing something different at a sector level and at a single stock level? Anna.
Yes, let's dive into some of that detail then, Guy. And we were certainly right to focus on basic resources and the impact that that sector would have this morning, because that and energy are the best performing sectors at this stage of the trading day, just less than a minute in. But basic resources up by 0.7%. We've got new highs on copper prices, gold prices, silver prices. So Fresnillo, which produces at least one of those, is up this morning, and most of that sector is in positive territory. Energy is another strong performer, up by 0.5%. The oil price is up 1% this morning at $61 a barrel on Brent. We've got Saipem higher. I think there was a contract win there. Subsea 7 is higher. So some of those oil services businesses, as well as the oil majors, trading a little bit higher this morning. Technology, another sector that's not doing too badly. Let's go to the downside, though. We do see utilities under pressure, and around 2/3 of sectors actually in negative territory this morning. But some of the UK listed utilities seem to be a little weak this morning. So Pennon, National Grid, United Utilities, those are the ones at the bottom of the basket. And food, beverage and tobacco, I'm thinking of the dairy story out of China. I don't see a huge amount of that impact here. It's certainly not the case that Danone is one of the worst performers here. We're waiting for Nestle to open up, but we do have Anheuser-Busch down by 1.3%, so there's certainly a negativity around the drink space in this morning's session.
What's interesting is the pharma's off. So in terms of the biggest drag this morning in terms of points, it's AstraZeneca, Roche, both tracking a little bit lower. Then you get HSBC, Nestle and Novartis. So out of the top 5, you've got 3 big pharma stocks that are adding significant sort of downside pressure. On the upside, it's still some tech trades, so you're still seeing a bleed across, I think, from Friday, and that tech story. So ASML is the biggest point gainer. It's up by only 0.7%. It's adding the most points. Siemens is tracking a little higher as well. Infineon is up. So what you've got is a tech trade this morning that is on, an energy trade and a metals trade. Glencore is up, Rio Tinto's up, Total is up. So you've got all of those kind of areas moving higher. And then maybe we're rotating away from some of the more defensive names, the Roches, the AstraZenecas, the Nestles, the Novartises.
And we add into the mix some of the news flow we had at the very end of last week around drug pricing deals with the US administration. And we've had Thomas Chinniker, who is the Roche CEO, has been saying this morning that new US drug deals signed last week could raise prices for some medicines in Switzerland. So if the US is not going to be backstopping the global pharma R&D mission to such a degree, then perhaps others have to pay more for their drugs. Anyway, we are seeing some...
Is that good news for the drugs maker, or is that bad news for the drugs makers? It depends if the others push back and say, no, we're not going to do that, which was the policy that was applied by the UK but didn't work out particularly well. Does one offset the other, and do we just see a netting out effect?
Yeah.
Or is this a positive or a negative? I don't know.
Yeah, let's throw the global pharma sector into the mix in our next conversation then. Willem Sells joins us, Global CIO for HSBC Private Bank and Premier Wealth. Willem, very nice to speak to you. Thank you for coming in. It's interesting to kick off on that thought around pharma and where it goes in 2026, because for all that we've talked in US equities about the strength of big tech, actually we've seen quite a bit of strength in some of the drug companies, utilities, energy. It's actually been a slightly broader trade than maybe we'd anticipated, or maybe than the news flow gives credit for. What's the role of pharma for you, that kind of business? We'll start with that granularity, and then we'll step back.
Yeah, I guess it's a diversifier, and lots of people are obviously looking at diversifiers because I think what you're seeing this morning as well, AI trade, right? Technology as well as the metals doing well, and so you need to be positive. I think on
Are they the same trade now? Is technology and metals the same
I think
trade?
it's coupled because it is linked to infrastructure, which therefore to metals as well. I mean, so much is linked to AI, unfortunately, right? Even if you look at GDP, our economists were talking about this. Half of the growth of GDP in the first half was linked to AI-related investment. And actually, that may be underestimating it because there is also the wealth effect through the AI stock upside that then is driving the top end of the consumer. And remember that the top end of the consumer, 20% highest earners, are responsible for 40% of consumption. It warrants for that. So if AI goes down next year for some reason, even AI sentiment or AI activity, then it has a big impact on stock markets, on the economy, and so on. So I think that's why people are really pulling out all of the stops in terms of diversification. So that is cross-asset diversification, a lot more interest from our clients in hedge funds as well. Trying to play the relative losers and alpha rather than beta. But certainly healthcare comes in that as well.
Okay, so that's the diversification story. Back to AI and all that will deliver in 2026. You say that we're on the verge of a really strong capex cycle. I mean, it's already started, but you see it intensifying in the United States. And you think that the market is underappreciating that. I mean, some of the numbers around capex are enormous. What is to underappreciate them? What are we not realizing?
So it's basically the adoption. So if you look at the adoption in different industries, so it's people tend to focus on on the chips, on the technology, on the software, and so on. But there is an adoption in the healthcare industry in terms of faster diagnosis, drug development, and so on. So a lot of investment is going to go into that. In the financial sector, in the in the telecom sector, fraud detection, those kind of things. So every company is looking at it, and quite often it's relatively low investments that they need to make as adopters to have to get the low-hanging fruit. Now, investment is going to the delta, so the growth rate of investment is going to slow. It was about something like 85% growth of AI-related investment this year. We think that's going to slow to 45%, but from a higher base. So still very substantial, and still going to drive a lot of economic growth.
Can we just talk a little bit about what's happening in the bond market? Back end of the bond market is beginning to see higher and higher yields. Let me just get the drop down right here. The US is now 4.8, 4.845. High of the year, 5.095. How do equity markets react? How do assets react if we start seeing the back end of the bond market basically signaling high yields are ahead? What's most vulnerable to that?
So I first need to tell you that we expect no further Fed cuts in the front end. And that is because growth.
Does that mean the back end doesn't go up as much?
So the thing is, so that's our core case. You could have an insurance cut if your unemployment continues to rise, but nevertheless, the Fed is almost done. If they do more than that, all of that speculation, or if the markets start to speculate about them doing more than that because of political reasons, etc., then central bank independence questions, then you just have a steepening of the curve. So the back end, as you're saying, is not going to rally. The back end has that pressure from supply. So far, all of that supply is well absorbed. Whether it's supply to fund that AI or government supply, but nevertheless, you're not going to get a rally. And mortgage rates therefore stay quite high, for example. So one of the obstacles for economic growth. The truth though is that so if you have much less monetary support, you have fiscal support that is accelerating. Lots of payouts that are going to happen, the refunds, etc., on taxes in the US, the SALT taxes, etc. In Europe as well, in China. Then you have the AI boost and so on. So we are having to rely much less on the monetary motor and much more on the others. But we think they're solid enough.
Are the others inflationary?
The others could be slightly inflationary, but your inflation has come down to enough of an extent for there not to be interest rate hikes. You know, it's one of the reasons why you're stop seeing you know, the interest rate cuts, right? And why even in the UK as well, you're going to have we have delayed our next interest rate cut to April because of you know, that sticky inflation that we currently have. You know, I think it would be a stretch to see interest rate hikes apart from obviously Japan, New Zealand.
So this is the second conversation we've had today where we've been thinking that maybe central banks aren't quite as central to the narrative next year as they've been. Maybe it's fiscal instead, and maybe it's the technology theme continuing.
Ultimately, it's earnings. Right,
It's earnings.
and so if you look at analyst earnings upgrades versus downgrades, you are at the highest net number of upgrades in the last 3 years. And it's not just in technology, it's other sectors as well.
But I noticed that the markets that you like are quite tech-leaning, aren't they?
Yes.
So the US, China, China's wider, but Singapore, Japan, South Korea, Hong Kong, there's quite tech elements there.
They're all countries. It's tech, but it's innovation actually. So if you look at the innovation ranking, basically all of those countries that were overweight are in the top 15. And unfortunately, you don't see too many European countries in that. You know, where therefore we have a neutral allocation, whilst we have quite a broad-based Asian overweight.
Right, even though Germany's doing what Germany's doing, and that big fiscal impulse to get back to the
Yes,
point
but
that
the
maybe
question there again is, are they doing what Mario Draghi in his competitiveness report wanted? And it's probably a no to that, or not quickly
spending the money
enough.
on the wrong things, or
Spending the money not on the innovation and making the EU much more competitive very quickly. And so I think markets already, you know, a lot of our clients have been disappointed with the speed of that spending and the areas where they're spending it on. They would rather see, you know, that innovation and the structural change.
So earnings are going to be a driver next year.
Yeah.
But at what point is 27 the year for rate hikes?
For rate hikes? It could well be. Yes.
So at what point? Normally, markets 6 months out start pricing.
Yeah.
So when in do I need to start pricing rate hikes in the back half of 26? And do markets are we going to peak in the middle of 26 and start basically talking about those rate hikes? Rate hikes usually end a cycle for everything.
But I think you said very correctly that you know, I sort of you know, changed your question. We were starting to talk about rate hikes, but you were asking about the long end. And I think that is the one where you could see volatility quite quickly in 2026. You know, even in the second half of 26 already. I think the first bit of 26, you're not yet going to see that upward pressure on bond yields, and therefore, you know, we also think that you need to go to 470 or something like that on the Treasury before you really start to have an impact on the equity market. But you could see that in the second half of the year. The actual rate hikes, the ones that we've penciled in for 26, I'm calling it this year now. 26, Japan, New Zealand, maybe Australia, and then 27, the ECB, but only in the second half for now.
The Fed? Sorry,
the Fed could be. You know, if we continue to have, you know, the strong, you know, different engines, right? So the AI and all of that together with that helping the discretionary the top end of the discretionary consumer.
And Willem, you mentioned in your notes ahead of our conversation, you mentioned liking income, certain income stories. I wonder how that fits with such a heavy capex cycle and a lot to invest for.
Yes, so it is again because you need to pull out all of the stops in terms of diversification and stabilization of your portfolio, you know, because of the very big weight of technology together with communications, the impact that AI has on different sectors, even just, you know, consumer sector, the metal sector, etc. So there are very few things that are uncorrelated. So therefore, you need to go to you know, the hedge funds, but you also need to go to you know, have some income in the portfolio. Obviously, we're also overweight gold, and that income clearly we can't be long duration at this point because what we just discussed. A little bit more emerging markets than we used to have there. You know, still private credit as well, clearly diversified, strong manager selection, and so on. You know, but you need an income element in the portfolio. The dividend payouts, the share buybacks, that is going to continue to happen as well, together with M&A and so on. But you know, so you get a little bit of income there as well.
Great to see you. We'll see you again next year. Well, it feels like we're already there, but we'll see you again next year. Have a great holiday season.
You too.
Global CIO for HSBC Private Bank at Premier Wealth. Thank you very much indeed. Let's take a look at the Core 6 this morning and figure out what is happening in terms of the major stocks that we track. Tech's on the front foot. You can see that with ASML. China's also tracking a little bit higher. Luxury's not having a bad day, but it's interesting that actually you are seeing some divergence within the farm space. Novo is up, but if you want to look at kind of the sort of the barbell effect, Tech up, Nestle down. So that's the trade you're effectively watching here today. Defense stocks are also on the move. A little bit of weakness there. Let's start there with Louisa Moon.
A bit of weakness in defence stocks this morning. Rheinmetall, BAE, Saab, Leonardo, all down into the red. That's after what was said to be positive talks between the US, Ukraine, and European leaders on a plan to end the war in Ukraine. So that's pulling down these defence stocks just slightly this morning into the red. Next up, we're looking at mining. That's after global commodities are rallying, including copper. So we're looking at quite these mining stocks that are exposed to copper in particular. So Rio Tinto, BHP, Anglo American, all ticking slightly higher into the green on the back of that, joining in that rally for commodities and namely copper. Next up, we're looking at Danone and Nestle in particular. This is after China has imposed duties on certain imports of certain European dairy products. So both these companies are very exposed to China, and this is pulling them down into the red, just ticking slightly lower on the back of that news. That's duties of up to about 43% from China starting from tomorrow. Next up, we're looking at Telecom Italia. Oh, sorry. First up, we'll look at Harbour Energy. They've bought a company called LLOG Exploration, so a US oil and gas company, and this is their step into the US Gulf of Mexico. So it's for $3.2 billion, so a big deal. It's them entering into that space, but the shares are dragging slightly lower into the red.
relative to what it was perhaps years or decades ago, but it is still, you know, the political system has withstood quite a lot of this pressure. The question now is how much more of this can it take? How much more loss of hard currency can it take and still remain standing?
Yeah, I mean, where does this leave the Venezuelan situation? How much pressure can the country take from Washington? How much pressure is the Maduro regime under right now?
A lot is the answer, but obviously for the moment it's 3 vessels, 3 VLCCs. I mean, that's a very small portion of what is, of course, overall still a pretty small part of oil supply. I think what we're interested now is understanding what happens next, what the sort of rhythm is from here. There's obviously been a very substantial pickup over the weekend, and for the wider sanctions picture, it is also very interesting. So what does this mean for the US willingness to enforce sanctions elsewhere? The Venezuelan situation is different. There is a significant impetus there that perhaps doesn't exist with regard to China's purchase of Iranian oil, for example. All the same, there are some big questions being raised at the moment. The oil market's taking it pretty much in its stride, and that for the moment is largely because of the small amount of supply that's coming out of Venezuela.
Okay, so we should still focus, therefore, on the fact that this is a well-supplied market, that there is a glut of oil out there. That is still the kind of overarching theme that is driving this oil market.
Without question, as we go into 2026, if you look at the big buyer of sanctioned oil, whether it's Russian or Iranian or Venezuelan, that is China. And China is overwhelmed with choice at the moment. It does not require this, you know, specific, the less than 1% of global supply comes from Venezuela, right? Very, very small. However, you know, let's see where we go from here, whether this escalates.
Clara, thank you very much. Clara Ferreira Marquez, thank you for explaining the oil sector to us this morning. Linked in some way, because of the geopolitical tensions, to the metals sector. So let's talk about that. Metal traders are seeing multiple all-time highs as gold, silver and copper see positive momentum. For more, we're joined now by Bloomberg's metals reporter Martin Ritchie in Shanghai. Martin, talk us through then what we're seeing with these record highs, a host of different drivers for the precious metals versus the more industrial type.
Yes, quite an exciting start to this final full week of this year, and it's been a quite amazing year for metals on the whole. So just taking a step back, you've now got gold up more than 2/3 this year. It's benefiting from prospect of lower interest rates in the US next year, from what's called the debasement trade, this kind of growing sort of level of decreasing trust in central banks. The US dollar's been weaker. And then you've got these geopolitical tensions as well, stirring all the time. And gold into next year, a lot of banks, a lot of analysts have picked it as their favorite metal, their favorite commodity for next year. Goldman Sachs saying, it could be on course for 4,900 next year, even higher if some of the private investors who are kind of less exposed to gold so far start putting more money into the metals. And what you're seeing today across the complex, you're seeing all the other precious metals gain a lot. And these are relatively small markets, and in a kind of illiquid time of year, with all this going on there, they're bound to make kind of quite sharp moves. You've seen silver, platinum, palladium all spike up today. So quite a lot going on towards the end of the year.
And is the momentum that we've got now sustainable, do you think?
In the precious metals space, it's hard to find people who are bearish going into next year. I mentioned Goldman just now, but across a whole sweep of people that watch this market, all the sort of signs are that this could go further. When you've got these, we're in very uncertain times geopolitically, and in this kind of period, it's when gold does tend to shine, and that's not going to change anytime soon. And as I said, there's not a huge amount of money, private investor money in gold so far, and the more that does go into that market, given all those fears, the more you could see gold rise.
Okay, Martin, thank you very much indeed. Martin Ritchie, Bloomberg's metals reporter, joining us on what is happening on a busy morning in terms of the metal story. I'm going to take you from metals to wicker next. wicker baskets, wicker hampers, all the great stuff that you could find in a wicker basket, wicker hamper over Christmas. Takes us to the next conversation with Tom Athron, who is the CEO of Fortnum & Masons, Britain's oldest department store, trying to break it actually away from Christmas, but Christmas at Fortnum's is something to behold. We'll find out what's happening next. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GPS. And as you know, Anglo holds 85% stake in GPS. Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in GPS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors.
Hello and welcome to GameSat. Today we're going to look at some ports of games that you may not know existed because they were overshadowed by the more popular versions. Now these ports may not be as good as, the more well-known versions, but hey, they exist. Anyway, let's start out with some Batman Returns. Batman Returns on the Super NES is a fun beat-em-up from Konami. It's an exciting romp and is much better than Sega's own Batman Returns attempt on the Genesis. You get to fight baddies and even toss shurikens at them from time to time. Sorry, I mean Batwings. Sorry again, I mean Batarangs. The graphics are great. Everything is huge and fat, just like an arcade game. The soundtrack is also really well done, using themes from the movie as well as other great-sounding original stuff. The biggest flaw in this one is that it's single-player only. Well, it may have been an issue in the 90s when it came out because, people actually got together back then, but these days it's more rare when that happens, so it's fine. But did you know that Konami also brought Batman Returns to the NES? Quite literally nobody knows about this version. Well, I mean, except for those who do. And here it's once again a single-player beat-em-up, though some of the settings and whatnot have changed a little bit. You have a few dependable moves such as punching, jumping, and your jump kick. You can also do a slide, which is a nice way to get to the other side of an enemy to attack, since this usually stuns them in the process. You also have a spin attack, which is good for when there's enemies on both sides of you. Naturally, this cost you a bit of your life bar. I mean, come on, if it didn't, you'd probably just spam it endlessly. You can also use the exciting select button to cycle between your grappling hook, batarangs, and nothing. These special items are used by pressing up and attack. You'll want to select nothing if you accidentally keep firing off your grappling hook in battle, for example, when you don't mean to. The batarangs do a number on the enemies, and even bosses, though they're limited. The good news, though, is that the fine citizens of Gotham City have hidden more for you underneath trash cans and whatnot. Some parts of some stages have status effects, I guess you could call them. Status of the stages, that is. Like here, there's ice on the ground, so you slide around a bit if you stop moving. Or how about here on this rooftop where you slide down slowly and you can even fall off if you're not careful. The enemies don't have to worry about falling off, though, because of course they don't. Or how about this drone which drops bombs onto the floor, creating holes? If you fall in, well, it's all the way back to the beginning of the stage for you. In order to change things up a bit, the game has a driving sequence just like the Super NES game does. Well, this one's actually straight out of the original Genesis Batman game, but it's still a nice and much needed change of pace. Like seriously, check out how close this is to the Genesis Batman game. That's okay though. The game does start to drag on in the upper levels. This is almost always an issue that affects any beat 'em up. You can only take so much of punching enemies a million times before a few more come in and then a few more after that.
西哥今天是找一个比较家常、比较稍微简单一点来跟大家分享，但是今天的配料跟佐料非常的多，所以大家可能就要稍微看久一点点。好啊，那我们就开始喽。来，那我们来开始准备配料啦。我们先准备柠檬啊，大概1/4颗就好，这个是等一下炒完的时候我们才要最后淋在面上的。再过来我们就准备蒜头啊，如果喜欢蒜味重一点的话，可以准备多一点点。我们把它切成薄片，或者把它敲烂也可以。他们泰国的话是直接把它敲烂，跟辣椒把它敲烂，可是这样味道实在太重太辣，所以我们就切片就好了。切完之后，我们把它放在旁边备用。再过来我们就准备辣椒啊，因为这种比较长的辣椒比较不辣啊。如果喜欢吃比较辣的话，可以准备一些朝天椒或者是一些小辣椒都可以，随便你们。一样啊，把它切成薄片啊。是如果你是在泰国吃到的话，它是把辣椒跟蒜头就把它捣碎啊，它的味道会非常重，非常辣。就看个人啦，如果你们喜欢味道重的，就自己在家里捣碎它吧。再过来就准备洋葱啊，我们准备点洋葱啊，因为醉鬼炒面啊，洋葱非常的重要啊。我们把它切成细丝就可以了，一样把它放在旁边备用就好了。再过来就青葱啊，青葱有的有放，有的没有放，就随便大家吧。像我们今天还是稍微放一下啦，最后的时候点缀一下比较好看。一样把它切好放在旁边备用。再过来就是最重要的9层塔，这就是9层塔。9层塔要稍微多一点点，因为我昨天买的时候它已经有点要发黑，因为这个是品质不是很好啦。你们尽量选一些比较新鲜的9层塔。西哥是因为昨天买。啊，今天早上要用的时候就已经不太行了，但是我们还是要取它香味就好了。9层塔一点，这样就完成所有的新香料了。再帮我们要准备一些青菜了。青菜的话没有硬性规定要用什么菜，所以你们就自己看吧。家里有什么青菜你就用什么青菜。像我们今天也不知道是什么青菜了，反正就家里有什么我就用什么。准备一点青菜。再过来就准备花生米啊，这个花生米是好的时候我们把它放在面上面的啦。他们有的会把它拍一拍、压一压啦。西哥懒得拍，懒得把它压，所以就直接1颗啦。啊，真正的话是要把它切成碎碎的，把它切成花生脆，放在面上面，这样比较好看。等一下如果我有时间，我再把它压成花生碎，好不好？准备一点花生。再过来我们要准备虾子，剥好壳的哦，这种虾子剥好壳的，来一点就好了。再过来准备鸡肉，我们把它切小一点，稍微腌制一下。他们泰国是没有在腌制的啦，但是我还是希望稍微腌制一下，让它有一点点的底味啊。切小一点，因为切小一点比较快熟啊。因为今天没有打算要过油，所以我们把它切小一点。好，我们把它切小一点，我们稍微腌制一下，放一点点黑胡椒，黑胡椒下去。放完了胡椒，对不对？我们放点盐下去，让它有点底味。再过来加点米酒下去，一点点就好了，米酒不用太多。再过来就撒上一点点太白粉，一点点太白粉就好了。我们把它稍微的搅一搅， 稍微的腌制一下，因为这个有的鸡腿肉会蛮硬的，所以我会比较推荐稍微的腌制一下。再过来就撒点沙拉油或者是香油在里面，这样子就可以腌制完成了。虾子的话，你要腌制也可以啊，你不要腌制也没有关系啊。再过来我们来准备调味料，我们先把它调好，等下炒的时候才不会手忙脚乱。我们来酱油放一点下去，再过来就是鱼露，鱼露我们也放一点下去，再过来就蚝油，蚝油也加一些下去啊。再过来就加入 ABC 酱油，或者是加入老抽也可以，因为这个 ABC 酱油的颜色比较深啊，但是它是甜酱油，放一点。再过来就黑胡椒。
蓝猴看起来软萌无害，是手臂杀手锏。除了蓝猴之外，还养了许多特殊宠物的大神，宠物版面的三面猴、宠物熊狸，专门买2个价给各种宠物猪，7种特宠依次介绍。那就开始从零开始养蓝猴跟熊狸篇。影片由范伦赞助播出。男人最爱的就是简单又有效率，化妆水、精华、乳液、乳霜1瓶就够。限时活动经典款20 ml， 原价780，首购体验价390，全台免运，超划算。片中片尾都有详细说明哦。
这是哪里？
这边应该是在梨川3合1欧。
这个是一个非常非常小的站，上面有超商。
超偏乡，因为这次住比较远，准备搭车前往丰桥站找饲主。
这位先生呢，这位大神，他说他家养很多动物，但是他分散在各地，所以我们会坐着他的车到处去找他的动物。
前往丰桥站见大神。
终于来到一个比较大点的站。
这个字虽然说我们打字打出来是打理，但是它是日本丰富的风格，他们的新字体啊。汉字写起来更方便，所以他们有一个新字体。在这之前，先跟变成我们日本翻译员的绿茶接见。我们终于跟绿茶碰面了。绿茶宠物水獭4处，后面千万变成固定班底。
刚刚错过
总是美好。
现在这位先生要怎么称呼啊？
他们常叫凯吧。要吃东西吗？
怎么突然？
就是很有名的那个起司饼干，期间限定，松露口味。
哇，
就是很冰的伴手礼。因为我刚刚看到我前面一个女生少了3个，但好像到底多好吃，所以买。
就是要给凯源。
给你的。
哎，不好意思啊，先拿走了。
看到，好正式哦。
IG 追踪数有15.6万，头贴是懒猴的大神，在众所期待下出现啦。他 IG 点阅最高的影片观看数高达380.9万，但懒猴其实不是他 IG 上观看最高的动物，而是他3488万。我们频道曾经有过他的科普，影片最后会介绍他登场哦。我们 们这次为什么来采访千年嗓呢？是因为在8月的时候，有先到名古屋采访一位跟德爷一样养很多动物的名古屋版德爷俊野先生。在采访中得知，他有一位同样养很多动物的朋友，直接让懒猴住一间大房子，跟懒猴一起睡觉，就是枫桥版德爷。这位大神是位高铁工程师，常常到台湾出差工作。在俊彦嗓的介绍之下，联系上他。哦，谢谢。开车前往懒猴的家。
全然。他应该跟我说。他会做秀词。他把医生让的那个影片，翻到这边。就只有61个，但是不知道要怎么做，然后他觉得。
还好 YT 频道，大家记得支持一下哦。
终于到了第一个地方。
据说这边是给猴子住的房间。
哦，在下面，它在下面。哇，哇，好可爱！这整间是他的家哦。
スローですね。
太多了，太多了。哦，该做个正式的介绍了吧？
好，在我身旁是动物大神千田さん。こんにちは、千田です。スローロリスと一緒に暮らしてます。よろしくお願いします。
こんにちは。有名字吗？
はい。
Also, it is obvious that such kind of hardware design is mainly applied for 2D graphics.《怪兽地分少年》这是个独立自制的调查杂谈节目，终于要进入《C R 战强化季》的第2集。原本是打算大概1个月至少可以做1集，结果这一集真的是，anyway， 在上一集发布之后呢，我去看了 PS 20周年纪念特展，觉得还不错啦。虽然说规模有点小，但是感觉到蛮有爱的。但同时也感到很感慨啊，就是同样是20周年 ，PS 可以这样大肆庆祝 ，SS 方面就没什么声势。更不用说 PCFX， 那个才是真正的被时代所遗忘的20周年。虽然说在那个时代我是属于 CR 派的，不过都已经过了这么久，我想平心而论 ，PS 的胜出其实是很正常的一件事情。无论是宣传手法的新颖性，还是对第三厂商拉拢的积极程度，都是其他竞争者所不及的。而就算我们不去看这些外在要素，只单纯看主机硬体的设计 ，PS 也算是当代各主流主机里面找到最正确设计方向的一台。那么关于 CR 它的硬体设计又是如何呢？这就是这一集里面我们接下来将要验证的话题。CR 它是一台硬体架构非常复杂的主机，多颗 CPU 虽然提供了强大的运算能力，但是却相当难以驾驭，甚至有时候让人感觉到充满谜团与争论。例如说 SS 到底能不能绘制半透明色，又或者 SS 硬体性能到底是强是弱？这些疑问呢，就是接下来我们要在这个影片里面验证的主题。首先我们来看 SS 版的洛克 X 这款游戏，各位应该有注意到。画面上有一个物件看起来非常不舒服，就是背后的这个投射灯。相较于 PS 版半透明色呢 ，SS 版居然是用网点来蒙混。常听到玩家在讲的 SS 没有半透明色，就是在讲这种情况。不过等一下哦，只要再往前走几步，看到这个采光罩，这不就是半透明色了吗？这到底是怎么回事呢？为什么我们可以在同一款游戏的同一个画面里面，同时验证了 SS 没有半透明色，以及 SS 其实可以做到半透明色这样一种相互驳斥论点呢？这就要从 SS 的图像处理架构开始说起。首先，我们要知道 SS 除了